Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy back here for the morning call today. We'll make it short and sweet as we're getting near the open now. But the big news this morning was the jobs report. Came in a really dismal jobs report. Yes, the unemployment rate did drop by 0.3%, but that's not due to a bunch of new people getting jobs. It's due to a lot of people stopping to look for jobs. So we had a really big exit from the labor force. Labor force participation is at some of the lowest levels we've seen, I think, since the 70s or something like that. So really weak numbers there. We added only 74,000 non-farm payrolls. We were expected to add almost 200,000. It was the smallest job add we've seen in 3 years. So a really unexpected weak jobs report, and you're going to get analysis all day of what this jobs report means. You know, we were hoping to get an environment where good news could be good news, where hopefully the economy picked up steam and the Fed could exit from QE and the market could stand on its own 2 feet again. But now you're going to get analysis of, okay, what does this do for the Fed's exit plan with Janet Yellen, a very dovish Fed chairman in there? Is now she going to, pull back on the reins of this QE tapering and taper a lot more gradually than the steady plan that people had in mind for this year, where maybe QE is done by the end of 2014. With numbers like this, it doesn't seem like that's a possibility, and that's the way asset prices are reacting this morning. But we can take a look at the chart of the spiders, and what we saw this morning was that before the report, S&P futures were up about 5 or 6 handles, and after the report, there was an initial spike lower that sent us negative, but I think we got into that environment where bad news is being perceived as good news, and we saw a bounce back into positive territory for the futures. So futures are currently very slightly positive, so it'll be very interesting to see the action this morning to see whether we can hold yesterday's close, and then yesterday's low, if we do get some weakness, would be the area to watch. But overall, the market's just been consolidating. As far as the indices go, just been consolidating the beginning of this year. Some people might say that you want to see new inflows push the market higher at the beginning of a year. That's what we've seen in the last 5 years. We've seen the market get off to really good starts to each year. But every market's different. There's nothing has been conventional about this bull market that we've seen over the last few years. So there's nothing to say that just as a blanket statement that first 5 days are negative, you short the market for the year. I don't think that's the right way to approach the market, and especially with all the weird things we've seen in the market over the past few years, I definitely wouldn't put it past them to just digest those big gains for 2013 at the beginning of this year and then take off. But as we've been harping on, there has been some really good individual stock action this year, despite the fact that the indices have been a little bit lethargic. I'll go over some stuff I went over in the recap last night, but the banks have remained really strong. You look at Bank of America as cream of the crop. Citigroup is the other one that is looking best right now and that we really like. Look for some action in the biotechs today. The focus is going to be a lot on the macro today after that jobs report. So you're going to see, gold. I'll go over that stuff really quickly. Gold is up over 1% so far this morning on that perception that maybe this weak jobs report is going to prolong QE and not make the exit from QE, the QE tapering, as hasty. We can look at the 5-minute, 24-hour to get an idea of where it is pre-market. So up around 119.80 on the GLD. So that'll take us. Yesterday's high was 118.69. We're above yesterday's high. This high from a couple days ago is 118.92, so we're above that. So it looks like we're going to challenge this gap from January 7th. So see how it handles that area, and it could get some attention today. And then you look at bonds this morning. We'll see where they are. TLT is up as yields are higher. Maybe QE tapering not as hasty. And we saw a little bit of maybe a forecast of that yesterday, foreshadowing of that yesterday rather, and they're higher again. And you're also seeing the dollar sell off, which maybe that could be a net positive for stocks. See the dollar weaken a little bit as the dollar has been somewhat strong. So just a couple macro things on days like this where you get big jobs reports. Sometimes that's the focus, less of a stock specific type focus. But with the action we've seen so far this year, it has been a very stock specific tape. So hopefully that continues. But like I said, biotechs could be an area to focus on. Yesterday you had almost 300% gain in ICPT. That's going to get people licking their chops about potential lottery tickets elsewhere in the market and maybe some sympathy type moves depending on different drug companies. The casinos continue to act really well. MGM's the best in breed. Take a look at the chart there. Really strong. Could use a pullback to get involved there. And then high beta tech, I think you just have to take a very individualistic approach with these names. Baidu is one that we listed on off the charts, and it looked like it wanted to break out, had a really nice day on Wednesday, and then yesterday a really ugly, harsh reversal bar. See what that leads to. We have stops in place on all of our ideas, so Definitely used that there. Apple's been lethargic. Nothing really to say here. Amazon, Google showed a little bit of weakness yesterday, pulling back only into its 8-day though. And then Lulu is one I talked about yesterday as a potential short setup, but this morning Lulu is up about 1.7%. We'll take a look at the 5-minute chart to see exactly where it is. So it's up here around 58.29 is the last print pre-market. We'll see where that is here. The high on this candle, 59.08. So in the context of the chart, not a huge move. It's a decent percentage move in a volatile stock like Lululemon, but after a lot of days down, I wouldn't expect that short idea to trigger immediately. And it could squeeze. Like all trade ideas, we have a stop on this, especially in a bull market. We haven't really been sharing a lot of short ideas, but this is just something, a little bit of an H pattern that we saw. But people have different opinions on this one, and it's gapping up this morning. So definitely don't be stubborn with any sort of short idea in this market, and keep an eye on Lululemon. Could be in play a little bit today. But that'll about wrap it up. I think the best thing for you to do today, if you're a member of the virtual trading floor, get on the virtual trading floor, see how things play out intraday, because I think there's a lot of question marks on a macro and a stock-specific basis right now. On a macro basis, see how the market reacts to this news, just all the macro forces with the dollar and gold and all that stuff in play. Things could start to develop and get a little bit more clarity intraday today. Then on a stock-specific basis, the market's been lethargic to start the year. Stocks weakened a little bit yesterday, whereas the market continued to just hold in. But we did see some damage in some stocks that we watched yesterday. Make everyone a little bit more cautious, but overall it's very much a wait and see mode right now for the market, but I think we could get a definitive break to one side or the other relatively soon that could set the stage for a rally over the next few weeks, the first half of the first quarter. But this has been John Darcy, your editor-in-chief here for the morning call. See you back here for the daily recap.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.